look at gold. Got the snot kicked out of it by over $100 last week on Friday. And what are we at today? Well, we're up $108 right now as we speak. The physical demand is different than I have ever seen, as are all of these things. People at that level, speaking to institutional traders at that level, saying 25% allocation is good. Never seen that before, man. Not even close.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for October 20th through October 27th, 2025, while supplies last. First this week, 1-ounce Gold Philharmonics are just $99 over spot. Next, 2-ounce Silver Canadian Rocky Mountain coins are only $4.50 over spot per ounce. Finally, Kilo Silver Britannia coins are just $2.99 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're always delighted to have this returning guest for a weekly market update. Andy Schectman is the CEO of Miles Franklin Precious Metals. He joins us this Monday, October 20th, 2025. Andy, first of all, welcome back to the good old US of A, and thanks for coming back on Liberty and Finance.
It's always great to be back here. You know, sometimes you lament, I do, some of the things that have happened in this country and over the last several years, in particular the previous administration. But, you know, when you're away for a period of time and you come back to the United States, you realize what a blessing it is to live in this country. So it's good to be back. It's good to be back with you. I appreciate you, brother. Hope you're well.
Yes, certainly am, and good to see you in good spirits. And nothing like a little bit of a refresh to recharge. That's great.
Yeah, totally.
Today we wanted to talk about two main topics. I'll give you a teaser for the one that we're going to get to, and that's a covert repo action. Big news coming out over the weekend about the Fed, and they didn't talk about this, but they're doing it on the down low, bailing out banks. The Fed is bailing out regional banks with their toxic mortgage-backed security portfolios. We're going to talk about that in just a few minutes and where people can find out more about that. First, we want to talk about a topic I'm labeling fakes. And that is a heads up and a warning. You and I have done this several times about different deceptive practices perpetrated by different outfits. But here are two examples we're going to bring up today. The first one, I had a client reach out to me and say, hey, should I be concerned based on the fact that I'm seeing American Silver Eagles being sold for significantly less than spot, like 30 cents below spot on eBay, that I might have trouble people believing the authenticity of my Silver Eagles that I paid full price for if I ever go to sell or trade them? And I'm going to bring up a little picture here real quickly. Actually, I'll have my son put this up on the screen while we're talking about it, but it's a picture of it's a photo of a beautiful American Silver Eagle. It says brilliant uncirculated, and at a time when the spot price is over $50 per ounce plus premiums of somewhere north of $5 to $10 for Eagle at most reputable dealers who are having to deal with actual market conditions. These were going for sale on eBay for $35 each. And sounds too good to be true, right? Well, what do you have to say about your experience in your 35 years with Miles Franklin of these too good to be true deals you see on eBay for supposedly genuine coins?
Well, at first you said 35 cents below spot. Now you just said $35.
No, I said 30%.
Okay.
Below spot.
So, I mean, I guess if I were a sophisticated criminal, I would do something more like, the former 35 cents below spot. But I mean, shame on anyone that would actually think for a moment that anyone with half a brain cell would sell Silver Eagles for $35 a piece. In fact, I can tell you that every primary distributor in the United States right now that buy hundreds of millions of dollars worth of product each year from the U.S. meant they're all north of $6 over spot wholesale, all of them. So, you're not going to find Silver Eagles for anywhere near spot. And when it comes to $35, again, I'm not trying to be disrespectful to anyone, but I mean, come on, that's about as naive as it gets. Why would anyone do that? Why would anyone do that? And the answer is they wouldn't. And this is and shame on eBay for letting this stuff even be sold. You know, you look at these social media platforms, you know, when I first met you and during the pandemic, you say the wrong word. You say Hunter Biden, they shut you down like that, and you get a strike and pull your darn channel down back then. But now they allow people like this to sell what is a fake enough to where people actually start to wonder. And I've received some of those emails too, and there are companies selling gold eagles for next to nothing or buffaloes. Again, you're talking about absurdity. And with all due respect, the American Eagle product, American Buffalo, is the highest quality product around. And in order to buy it, you're going to pay well in excess of spot. So those should just be reported to YouTube, as far as I'm concerned, as being deceptive, unless it says clearly all over the thing, like for promotional purposes. Like, I'll show you something like, you know, I bought this stuff for promotional purposes, right? This big stack of cash, right? Oh, okay. Well, it's promotional purposes. It's all blank, right? If they want to sell stacks of $100 bills for, you know, $6, but you got nothing but paper, great. Well, the same thing is true with these coins. If they say promotional, not real, okay. But if they don't, as far as I'm sure, they should be reported as being deceptive. But I'll tell you, you're not going to find them anywhere for anywhere near spot, let alone 30% back of spot.
Yeah, my wife was just showing me about a week or two ago another place where it came one of these mailings that comes, and it looked for all the world like, you know, 10th ounce American Gold Eagles or this or that, and then somewhere in the very fine print they said designed after or modeled after, or the word plated showed up somewhere in there, and it's like, you know, 90% of people are not that sophisticated. They just know it's very intentionally misleading. It's made to look like the real thing. And you have to be pretty much an attorney or someone with enough experience that you start scouring, looking for the fine print to find out that this is a plated product and this is not really from the U.S. Mint or that sort of thing.
You'll even get some of the players in this industry, the ones that you have spoken out against, that will make coins to look like American minted products, whether it be the walking silver Liberty dollar that they manufacture themselves, which is just a round, but they think that they're buying a U.S. minted coin, or the Morgan silver dollar round, and they think they're buying a U.S. coin. Now, every dealer, ourselves included, sell Buffalo rounds. That's just, everyone sells them. They're the most... they're everywhere. All of the refiners make them. But I would bet a lot of people, I'm always fast to say, remember, these are not American mint coins, because they make the gold buffalo and the gold eagle, but not the silver buffalo. Well, I bet you a lot of people think they're buying U.S. mint product. The point of it is that, you know, it's one thing to buy a round brand new and be misled. And to pay spot over spot. It's another thing to think for a moment that you would be able to get anything below spot at that level, which would just be insanity.
We're covering a number of different things here. That's things that are actually being claimed to be genuine, being that can't be because of the pricing. Too good to be true, being sold on eBay, for example. And can you just hit for a minute? Why is it? And I know, because I went through, and you onboarded me as a broker for Miles Franklin. I had to go through product knowledge training. I had to go through anti-money laundering training. I had to go to know your customer training. I had to get bonded by the state of Minnesota. Why is it that Miles Franklin, for example, as one of the only 27 authorized resellers of the U.S. Mint, is completely different from buying something on eBay?
Well, because not only are we held to a higher standard of licensing and bonding with the state of Minnesota, it's the only state in the country that mandates it. And that's why, even though you and I both live in Florida, where we've had a satellite office for 17 years, I have brokers all around the country that represent us, like yourself. They're all beholden to the Department of Commerce in the state of Minnesota, where our home corporation is located. That means we're licensed, we're bonded, we're background checked, we take all the continuing education. And that's important in an industry that is federally non-regulated. We've done this for 36 years. This February, we're approaching 14 billion in sales. We've never had a material customer complaint. We're not going to ever mislead the public, ever. And I think that does stand for something. That is worth something in an industry where everything you buy is homogenous. like a McDonald's hamburger in Minneapolis should taste the same in Boca. That's homogenous. Well, the same thing is true. You buy an ounce as an ounce as an ounce. The difference is who you're working with, the reputation, and I guess price is important. But in the end, and we're as competitive as anyone, you know that. But in the end, what really matters is integrity and honesty and track record. And in our case, licensing and bonding, which sets us apart from the competition, in my opinion.
Now we turn the page to something that is entirely a new kid on the block. It's not entirely new. It's an AI-generated fake we're going to talk about, but this same sort of thing has been, we're susceptible, we're vulnerable to this as humans, to be misled. And one analogy I'll bring back to is the War of the Worlds by H.G. Wells. When that radio show was presented, there were some mass panics and hysteria, that false calls to the authorities and everything, and it even affected newspaper headlines, that kind of thing. And there was a lot of confusion around that. So that was a good example in the past. That was back in the 1930s of the power of mass media that people had become accustomed to thinking was trustworthy to fool suddenly and intimately, instantly at large swaths of the country into taking action. Well, just this last week, a video came out, and it appears to be Warren Buffett talking in front of the shareholders meeting there and being reported on by CNBC. And the title of the video is "Something Terrible Will Happen to Gold, Warren Buffett's Last Warning." I had two clients. One shared this with me and said, "Gee, do you and Andy need to refute some of the information that's presented in here?" We'll talk about that in a minute. But another one who has been a very serious client, significant client, said, "It looks like I need to start selling my gold." And so these are people who are business owners, people who are very clued in, people who are dedicated to the principles and understanding of why it's important to protect yourself with real money, being pulled the wool over their eyes because this new technology, this AI-generated deep fake technology, it's called, is where they can take the voice and the image of someone and make it look like they're saying something that they never said. So they editorialize, it can be the message of the people creating the video who want to get their message out, but they're using a famous, well-known person as a sock puppet, basically, to get buy-in, and they'll even use like the CNBC logo or something to make it look like this was covered on national news, so therefore it's trustworthy. And so several things all occurred at once. One is I was very concerned, oh my gosh, if these two clients already are telling me within 2 hours that this is a concern to them, one of them ready to sell all his gold to take an action, in response to it, this could be like where somebody shouts fire in a crowded theater. This could cause a whether it's intended or unintended, a major reaction on the part of moms and pops who deserve to be told the truth and aren't being told the truth. Secondly, my son looked into it. I have, as you guys know, several sons, and two of them are involved in this channel with me, looked into it and found that even hidden in the description of the video is an admission that this is a AI-generated content, that they sampled Warren Buffett's voice and his imagery, and they tried to compile some editorial descriptions of their own based on what they claim is loosely based on statements that he's made publicly in the past or that sort of thing. But it coming off like it's this new information from Warren Buffett. And the more that it occurred to me, I thought, why are we so vulnerable? Why are we as humans so vulnerable to this type of con job, this kind of fraud? And it occurred to me that we, at our core, are truth-seeking beings. We believe that the truth exists. We believe that it's important, and we're always looking for it. And we don't always expect to be being lied to by various sources, especially sources that we've come to take as trustworthy substitutes for the truth. Firsthand experience, traditionally looking someone in the eye, giving them a handshake, talking to them face to face, your own gut, as you say, trust your gut, trust your experience. That's the core that most people have relied to for generations. But then if we hear hearsay, somebody telling you, well, I heard someone so and say this, you take that as sometimes, depending on the trustworthiness of the source, as a substitute for the real thing. And it led me to thinking about what Rafi Farber has told to us about, is that fake money leads to all kinds of other fakes. And Jim Rawls from survivalblog.com telling us that we are living in the age of deception and betrayal. He said, invest accordingly, relocate accordingly, and prepare accordingly. And I thought more and more about forgeries like the fake ASEs that we were talking about just a few moments ago, American Silver Eagles, and other fake sources of information that we take as replacements for the truth, and fake money that we take as replacement for real money. Our friend Maurice Jackson will remind us that the US dollar, as defined by the Coinage Act of 1792, is 371.25 grains of silver. That's the definition of the US dollar. It's real. It's on the elemental table. And yet we've been told to accept these paper printed Federal Reserve notes or just digital representations of them as substitutes for the truth. So we just tend to allow ourselves to be led away from the truth. And there's even deeper philosophical reasons I believe that we are truth seeking because of who we are really, who we're created by, or created by a greater power, the truth itself. You have St. Augustine saying, "You have made us for yourself, O Lord, and our hearts are restless until they rest in thee." You've got scripture reminding us, I am the way, the truth, and the life. So I believe that's who we are. We are made to be truth seeking because that's our origin, that's our home, that's where we came from, that's where we want to get back to. But my gosh, we are vulnerable to being misled. So this is a kickoff. What should we think about? How can people understand? And we can start taking some carefully considered refutation of some of the claims that were made in this video, such as the S&P 500 has outperformed gold since Nixon took us off the gold window, or that the central banks of the world for the past 5 years have been acquiring gold hand over fist at unseen record levels that exceeded all the purchasing of the last 60 years because it's a tradition and it's window dressing and they want the optics of it. Help us to refute some of those claims, but also give us perspective about trusting our gut in general, because I believe Jim Rawls is right. We are living in the age of deception and betrayal, and you keep telling us we have to trust our gut and I'll hold on to the real things.
You know, I remember laying on my floor 1977, 78. I was 7 or 8 years old, born in 1970. And I remember having this big booklet that came inside of a record album, War of the Worlds, H.G. Wells, and being terrified of it, listening to it over and over again and thinking it was so cool. And my dad said, you know, when that happened, people were like literally jumping out of buildings. They had thought the world was being taken over. Now, that was one thing when information back in the 30s wasn't as readily available as it is now. But I think the more things change, the more they stay the same. You know, I'm in a fantasy football league, and we've been friends since high school. These guys have been doing it for 40 years almost, and 35 years. And a friend of mine in the league took a picture of two of the guys in the league and made them look like they were making out together. It was the realest, most frightening thing you've ever seen. They were at a bar together, having a drink and waving, and the next thing you know, you push play and they stand up and they start kissing, which wasn't true. It was all AI. It said AI at the top. It's terrifying how real it looked. My podcast, one of the podcasts I did with Kevin Hauser while in, not yours, but the one I did with Mark Z, while I was in Aruba. Someone like I've done 5,000 or 6,000 podcasts since 2019, as have you, but there's 30 or 40,000 of them out there, as are of yours. So people will take our snippets from our podcast, they'll put their own words and images in and music, and then they'll do it to monetize their channel, clickbait, right? Well, and it really this one made me mad. And normally they don't. Like, I don't know who these people are. Normally they're flattering. They're using my stuff to have people come and watch their shows. But this one said something like, oh, you know, silver's dire prediction, what happened? And I didn't even come anywhere near saying what the silver price was going to do. It was on Friday after the price collapsed a little bit, making it seem like Andy Schectman says it's all going to collapse, it's all over. That aggravated me. But the point of it is that there's deception everywhere. There's deception in AI, which is only getting more sophisticated. There's deception on social media, which again is in many cases I'm okay with because it's getting the message out in a flattering way. They never asked my permission, but that one made me mad. I don't know who these people are. When we talk about, the Warren Buffett thing, I mean, you can easily blow it away. Since we've left the gold standard, gold has outperformed every traditional asset. It's not even close. Since 1971, it's not even close. And that's not even worth talking about it. And traditions of central banks prior to 2017 for many years, like 2008 through, or for sure 2011 through 2016, they were net sellers of gold. Most central banks are net sellers. The United States has been a net exporter of gold, and all of a sudden we're the biggest importer. But I'll say it this way, as do you, every week when I do these shows, I need to prepare, and I spend 2-3 hours a day, pretty much 6 for sure, sometimes 7 days a week, studying. And every story that I find that I want to talk about, I will try my damnedest to validate it everywhere else, running it through Google, running it through various forms of AI, searching for other stories, other validations, because there's a lot of misinformation out there, even through, people's best intentions. But something like that is anything but best intention. And, you have to wonder what the motivation is. And here again, shame on YouTube for letting this stuff out there. They were so quick to put a strike against you and remove your video for saying the wrong thing during the previous administration, which was just actually proven to be mostly true. Yet this kind of stuff, which is far more damaging on many levels and deceptive, intentionally gets the green pass. Aggravates the heck out of me, to say the least. But what I would say is it's very important for people to fact check and do their own due diligence. Don't listen to what I say or you say and take it as gospel. I do my best to make sure that it is real, because you put your name out there as often as you and I do, we'd look like idiots real fast and no one would want to listen to us. So we both try real hard to say the right thing. But no matter where you're getting information, do your best to fact check it, do your own due diligence. A little bit extra won't hurt. Stuff like that's very damaging. And just the 2 comments you made, no, the central banks don't do it as tradition. They're doing it now for the first time, maybe ever, where in coordination, they're massively buying it. And in terms of, S&P outperforming, you can go back to August of 71 and look forward. You can go back to the beginning of 2020, 2000 and look forward. You go back to the last 5 years and look forward. The S&P 500 has not outperformed gold. In fact, it's quite the opposite. So I don't know what else was said in that stupid video, but it's aggravating that the platform doesn't shut it down the way they tried to shut down all of us for trying to do the right thing for 3 years.
So I'm going to end this rant of both of ours with a humorous twist, and that is, in the video purporting to be Warren Buffett speaking in front of his stockholders meeting and purporting to be reported by CNBC, there's a synthetically generated couple of cans of Coca-Cola on the desk in front of him. He's legendary for being a owner of shares of stock in the Coca-Cola company. Coca-Cola's they've had many jingles, but one of them that I remember is "Ain't nothing like the real thing, baby." And I just would remind people of that don't take a substitute of a substitute of a substitute for the truth. Check it out from multiple directions. Trust your gut. And remember that applies, ain't nothing like the real thing, baby, when it applies to money as well.
Well, they should have put a couple cans of Pepsi in there to give us a clue that it was all a bunch of nonsense. But hey, I think the bottom line is this, Dunnigan, and I'm dead serious about this. The level of sophistication of people out there that are trying to do the wrong thing is pretty high. And as a business owner, I see this every day with our website, with just a million different things, phishing emails, people trying to scam everyone and everything. So it's never been more important in a world that information is like that we still have a little bit of our own critical thinking and do our best to validate it on our own through due diligence, the things that we think are worthy enough of making or taking action on. Like people say, maybe I should sell my gold because Warren says so. Well, maybe you should make sure that what Warren is saying is true first before you take that step.
even making sure that it's even Warren and not just somebody trying to use him as his name as a sock puppet to get their message out for whatever reasons they're driving at. Okay, next topic that we promised in the beginning is a eventful moment we've been waiting for. Our friend Rafi Farber, headquartered in Israel, has been warning us for quarters that the repo facility of the Fed to backstop the banks and prevent the plumbing from clogging up at overnight because they don't trust each other on overnight loans has been running dry. And he said, this can't go without. He says, I don't know what the next thing is going to happen, but it can't go on like this, because we saw what happened a few years ago in a September evening when the overnight repo lending rate leaped to 10% because the banks weren't willing to loan to each other. So shout out goes to John Rubino, who we interview often on our channel. He just put out a Substack post. We'll put a link to it in the description of this video, called "The U.S. Quietly Bails Out Its Banks." Once again, the regional banks are in trouble. This time the crisis began with several commercial industrial loan defaults and is progressing into yet another multi-billion-dollar bailout via the repo market of, sounds like, regional banks. And he gives screenshots there directly from the Federal Bank of New York, the Federal Reserve Bank of New York, saying that they've got a new $500 billion repo facility they've suddenly opened up. Everything's fine here, folks. Nothing to see here, but we better be ready to help bail out the banks for $500 billion just to make sure. Your thoughts on the lead up to this, what you've been watching as the repo facility has been, burning dry, versus the fact that this is happening right now, and yet it happened on a Friday with no fanfare whatsoever.
Because there was more fanfare of the stupid anti-King rally or whatever it was, and CNBC came out and they were showing videos from 2017. I digress. We don't need to talk about that. But what I will say is that we've settled for a long time, Dunnigan, that the banking issue is not over, and it's been muted, yes, for sure. But what this is, in essence, is a bunch of commercial real estate and residential real estate loans are going bad. Auto loans, they're all going bad. People aren't paying. They're running late. They're delinquent. No one's in office buildings. I was at my attorney's office in Minneapolis last week. They have 3 floors of an office building. Felt like I was in a morgue, literally. And they re-upped it. Like right at the beginning, right before the pandemic hit, they re-upped a 10-year lease. I mean, in downtown Minneapolis, you could have 10,000 people on these 3 floors, literally, and there's no one there. It's crazy. But this is the kind of problem, not my attorney's office, but many like it, where they're delinquent. They're not paying. They're going into forfeiture. And so you have a bunch of these loans that are going bad, which makes the banks run low on cash. They're not getting their payments. So to stay afloat, they go and they hit the repo market, where this is where banks trade assets, typically U.S. Treasuries, for quick overnight loans from the Fed. I'll give you my treasuries. You give me some money, and then I'll buy back the treasury the next day or next week or whatever. It's overnight. It's next day. Some are longer than overnight, but that's why it's called repo. It means repurchase. Here's my treasury. Give me some money so I can pay my debt. I'll give you back the treasury, or I'll buy back the treasury the next day. Great. The scary part about all of this is that now these banks are pawning off their risky mortgage-backed securities instead of the safe treasuries. That is the sign of stress. That is what should be disconcerting. This is why the Fed injected almost $9 billion and opened up a $490+ billion emergency facility. Shh, don't tell anyone. No one knows about it. It's $500 billion. And you don't do that unless something is beginning to fracture underneath the seams. And this is what we said would happen. And that's the part, that's why I'm so fond of the little by little, the logarithmic decay, because the little by little, these things that have been breaking little by little under the seams, instant gratification, even in information and in thought process, isn't quick enough for most people in this country. They aren't able to understand that these things take time. At this level, it is an ocean liner trying to turn. These are very big deals, and they're not getting fixed organically. And the problems with commercial real estate are only going to get worse, as are the problems with residential real estate. The only way the residential real estate problem gets better are for prices to go down and or for interest rates to go higher, not lower. That's what got us in this problem to begin with. Well, the commercial real estate is a whole nother animal altogether. You got all of these companies that realize, well, we're just as productive working away from the office as we are in the office. So why spend all the money? And it's creating a real problem. The banks are not out of the weeds yet. And when you see the Fed coming in and quietly doing this without, again, our media just is pathetic. Our media, guys like John Rubino, God bless them, guys like you, all the people who are telling the truth and getting the real information out. These are the ones that were shadow banned during the previous administration for misinformation that turned out to be true. But here again, where is the journalistic integrity? Where are the news media outlets talking about what is exactly happening? And what it means is the banks are in trouble. And not only that, no one wants to leave their money in the bank. They'd rather move it to treasuries, which short-term treasuries with disintermediating the bank, or even into money markets away from the regional banks and into the bigger banks. The problems are not done yet. And this is a good sign of it. When they are trading their mortgage-backed securities instead of their treasuries, they're in need for cash, and cash quick, and they're in trouble. It's kind of like, you're pawning off your wedding ring at this point, and hopefully you'll lend it to the pawn shop. Hopefully you'll buy it back, because your other assets are already gone. And it's a very scary sign, to be honest with you.
This is the kind of thing where it seems like this is big news. It's something that we've been watching out for and anticipating, and yet it's not talked about. And the important impact of the fact that the quality of the so-called the collateral that's being put up by the banks is something that's already inherently risky. But and Alistair McLeod has been talking to us about this for years, about the Eurozone banking system, that Italy and Spain and Greece are putting up these packages. They lump together these toxic loans that they think are absolutely non-performing assets, and then they push them off to this, it's called like tier 2 or something, with the European Central Bank, and they get full credit at face value for these things. And they go, look how liquid we are. This is great.
Donegan, sometimes you'll get the comments in the YouTube sections. They'll say things like, well, they've been saying this for years. That's our curse. We're early, and we see things based upon mathematics, logic, and economics. That's Mother Nature, in essence. That's the law of mathematics, the law of economics. Some of these things are not really law, but math you can't run from. And these things always manifest themselves somehow, some way, usually way later than we ever think. But these are the things that we have been saying for a long time, and guys like Alistair who have been saying, and the Western elite have had a very, very magnificent ability to keep the ball up in the air through all sorts of gimmicks and tricks, accounting tricks, injections of money, lying about the measurements of inflation and employment, and on and on and on, right? But at some point, Mother Nature says, well, you know what, your time is up. And at one of these moments when we least expect it, you will see a problem with a major bank. The systemic nature of it. We could look at the problems at the LBMA as an example. All we keep doing is focusing on the LBMA and what happens if there is a silver failure to deliver by one of these massive banks. These are all commercial banks. Well, if a bank fails in silver, fails to deliver, the systemic reaction, the contagion, would spiral through everything, because they're not just bullion banks. They're banks that have their fingers in all of the other financial pies. The same thing is true here, and that you see one of these banks and you start to see problems with commercial loans. Not only that, you have what's called credit default swaps, where in essence, you're buying insurance against this stuff. And this is why AIG had to get bailed out. If it gets bad enough and you start to see big banks fail because of, bankruptcies, which are non-recourse in commercial real estate, and you just see this cascading effect. Now, we haven't seen it yet, but logic would dictate that we might, right? Who's going back to the office? And it's the opposite of that. Who knows where this leads? And this is when you see people start to pull out of regional banks, and the regional banks are the ones in big trouble, in my opinion, because of this exposure. So, yeah, I think that this is why you see assets like gold and silver and cryptocurrencies like Bitcoin being purchased, because people are trying to get away from the potential for a systemic contagion that's out there. And this is a good example of how it could happen. And if the Fed wasn't concerned about it, well, they'd be a little bit more open about it. The fact that they're so hush-hush reminds me of the FDIC saying, well, if the public really knew, they'd freak out. Remember, we showed that video a year or two ago. It's the same thing, and it's just more of the same thing. That's why people like you, I always say it, are more of a real source of information and news than the media, which is more about divisiveness and entertainment, if you want to call it that. It's not about understanding what's really happening. And John, Rubino, and Alistair, they're spot on. This is a problem that has not yet resolved itself, not even close.
There's one more topic I wanted to bring up about this concern expressed by clients about the genuineness of things and how well they should trust that people will accept the authenticity of what they buy in the future. And that is for clients who've been buying pre-33 slabbed and graded gold coins graded by the PCGS or NGC. And you can talk to us about why those grading organizations are some of the most well-recognized. But there's a well-followed, I'll just say a coin shop that has a very wide online following. And they just posted a video last week of their owner going through a client's graded coins that he was bringing in. These are slabbed and graded like MS64s. And the owner was looking to him one of my ones and said, yeah, that's not a 64. That's not a 64. I wouldn't, no, they did it wrong. They got it wrong. And I'm wanting to pick through his favorites among those. This raised alarm bells on the part of this client, wondering, well, shoot, I've been hoping that by going to graded coins by these main grading services, there'll be somebody, an expert has looked at them, and that will help to dispel any doubt on the part of the potential future buyers or trading partners of the authenticity of these coins. Can you talk to us about where is there a gap here? Is it that there's a very wide range of latitude in the grading, or is it that some coin shops might just want to assert their own right to pick and choose and handpick among those? What about that? About the concern about the trustworthiness of major grading services?
I don't know who this is, and I don't want to know, because I'm going to say shame on this person, but there is more nuance to it. First of all, there are other grading services. The premier grading services are PCGS and NGC. PCGS, the Professional Coin Grading Service, right there. They're part of Collectors Universe, publicly traded company, and the Numismatic Guarantee Company. And these two companies do nothing but standardize the industry. Now, if we're talking common $20 gold pieces, that should never happen. Never, ever happen. With one caveat. When you get up into higher graded coins, and 64 on a Saint or a Lib really isn't that high at all. But when you get up into higher graded coins or rarer coins based upon age and scarcity and whatnot, PCGS came out with something called CAC grading, which is just a step above. In other words, there are different levels of 64s and whatnot in the respect that, how can I say this? Like eye appeal, right? The coin may classify as a 64, and it is a 64. For the guy to say it's not a 64 if it's PCGS and NGC is absolute crap. However, there is an issue with eye appeal, and one 64 may not look as good as another 64, and that is true. And CAC grading came out, and I don't know what it's NGC Star or NGC Plus, I don't remember, but they're coins that are very clean. So sometimes when a coin is certified, and in this holder here, it's hermetically sealed. But if a little drop of air gets in there when they're sealing it, over time, that air can create a copper spot because they're not pure gold. They were used as legal tender. So there's alloy in them. That little bit of air over time would create spotting. And there might be other examples of a 64 that looks like a 65 or a 66 and one that looks like a 63. In higher graded coins and more expensive coins, that is legit. That's why they had it. And again, it's really a knock against them, I guess you could say, of having to come out with 64 CAC or, PCGS CAC. And I forget what it even stands for, but it basically means it's got great eye appeal. Look, when you're buying, this is the whole thing about buying numismatics. For me, if I'm going to buy numismatic coins, I am going to buy semi-numismatic coins, common stuff up through grade 64, 65, where you don't ever have to worry about that. If you're going to get into numismatics and you're going to start collecting higher price stuff, rarer stuff, you need to immerse yourself in the nuances like this. But I don't know which company it is, but I will tell you this, that if anyone were to send me back 500 MS64s right now, St. Gaudens, they would never, ever hear from me saying, those didn't measure up. That is not true. That is not true. They are standardized. And I guess I'd have to see the story at greater length to have a little bit more of a perspective. But here again, shouldn't happen in general unless it's a really rare or expensive or high grade coin.
And you make a good point that the two grading services that you keep mentioning, PCGS and NGC, are the ones that we are aware are the most well-known, well-followed, well-trusted.
The other ones are fugazi, period. The other ones you don't want anything to do with. I mean, and they're fine. Some of them are okay, but the dealers will not honor them the way they will PCGS. PCGS and NGC are Coca-Cola and Pepsi. Everything else is nonsense compared to them. If you're going to buy a nice coin, do not get it ANA graded. And I have nothing against ANA. I'm just saying the reality of it is PCGS and NGC dominate the market share and dominate the non-subjective, immediately liquid marketplace as they should.
Thanks for that. And folks, if you want to watch other conversations that Andy and I have had about debunking some of the myths around graded coins, as far as people saying that they'll always be non-confiscatable, or people saying they'll always be traded for much higher premiums than, so you should always buy them. That is a drumbeat that certain dealers rely on to make sure that they get higher markups, and you need to be careful. And if the dealer telling you that's where you need that product, because that's the only thing that's going to protect you. Any further thoughts on that before we wrap?
No, I think that's good. Just a couple of other things to mention. It'll take me all of 3 minutes here. I just went through some stories over the weekend that I think are worth mentioning. The largest silver refinery in India evidently has run out of stock for the first time in history. India being one of the largest buyers of physical silver. That's a big deal. I think worth certainly mentioning. The managed money is short by over $1 billion on silver, meaning the commercial banks took the other side. I wonder how that's going to play out. I would suspect you'll see silver really start to move this week when the managed money, the dumb money, in relation to the commercial banks, the ones that seem to always be on the right side of the trade until one day they're not. And maybe this is the one day one would expect silver to really start to move higher here right now. I don't like to make those kind of predictions, but I will tell you that this is very unusual to see how short the managed money is. At the same time, you have, right now that the LBMA is blowing up in terms of running out of stock, you have, for the 18th day in a row, backwardation between spot and futures. Right now, it's about $1.24. This tells you that the people are paying extra to get real silver now, not in the future. This is not bearish. This is a panic for the real metal. At the same time, short sellers are now paying a 19% annualized rate just to borrow SLV shares, where we see a lot of shorting, and a 39% lease rate on the LBMA. This is not indicative of a well-functioning market. Bank of America on Monday raised its forecast of silver to 65 per ounce by next year, with an average of 56.25. Until then, they also lifted their outlook to gold for 5,000. And the last thing that I will say is, and I may have repeated this last week, but for people who haven't heard this, you got 4 or 5 things that are incredibly bullish. You got, as we mentioned before, Morgan Stanley saying no more 60-40, 60-20-20. Get rid of half your bonds, buy gold with the other half. 60% stock, 20 bond, 20 gold. When have you ever heard a financial advisor say 20% in gold? This is from their chief investment officer, their CIO. This guy and the people that I'm about to mention speak to not the plebes, but to the institutional level traders, not to the rest of us. They're saying put 20% of your money in gold and pare down your bond holdings by 20%. Michael Hartnett for Bank of America This is the one that just said, 60, whatever, $65 on silver. Michael Hartnett's newsletter, I don't know how much it is, but I bet it's 10 grand a year. He just came out and said, no, it's 25, 25, 25, 25. 25% stock, 25% bond, 25% short-term treasury, and 25% gold. Whoa. Then you get Jefferies. Now, as you mentioned at the onset of this meeting, we were blessed by Prudential Beige about 20 years ago, and they nominated us. The authorized resellers, the 6 or 7 of them, can nominate one primary reseller, the primary distributors can authorize one authorized reseller. And they did. Prudential Beige authorized us or nominated us to be an authorized reseller, one of 27, about 2 decades ago. God bless them for that. Walter Pahowicz, if he's still out there, Walter, I love you. He used to run their desk. They got bought by Jefferies. And Jefferies Beige was the name. Jefferies Beige was a primary distributor for all the major mints. They understand gold. They subsequently got out of the market, sold off the Beige name, and it's just Jefferies. Their head trader is saying $6,600 gold is their next stop. They understand gold. But maybe the biggest of them all is Jeffrey Gundlach, the bond king, the man who's made his mark, his fortune, and his moniker of being the bond king by selling bonds, who just came out and said a 25% portfolio allocation to gold is not overweight. Really? So when you see these people at these levels, and then put into it all the stuff coming into COMEX and the draining on the LBMA and the high lease rates and all of this stuff, the Judy Sheltons of the world, and the Trump saying he who has the gold makes the rules, and Besant saying, I want to remonetize, be part of a new monetary. Keep going. I'll keep going. And I'm telling you, and I hate to say it, I cringe saying it, but this time it's different. And look at gold. Got the snot kicked out of it by over $100 last week on Friday. And what are we at today? We're up $108 right now as we speak. The physical demand is different than I have ever seen, as are all of these things. People at that level speaking to institutional traders at that level saying 25% allocation is good. Never seen that before, man. Not even close. That's all I got. That's a mic drop moment.
I know that our Miles Franklin Weekly Specials are TBD as of this moment. We'll get them in here as soon as we have them before we post this evening. Andy, as always, thank you for joining us for this weekly market update on Liberty and Finance.
I love it. Done again. I wish you and your family the best. Everyone out there the best. These are crazy times, man. They are. And I have a feeling they're only going to get crazier. I truly do. So thanks for letting me ride shotgun with you all these years. I love it more than anything, and I look forward to picking up with you in the shotgun seat a week from today. But until then, I'll look forward to catching up.
Take care.
You too, brother.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for October 20th through October 27th, 2025, while supplies last. First this week, 1-ounce Gold Philharmonics are just $99 over spot. Next, 2-ounce silver Canadian Rocky Mountain coins are only $4.50 over spot per ounce. Finally, kilo Silver Britannia coins are just $2.99 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.